Hi, thanks so much for joining in. You're watching NDTV Profit and my name is Alex Mathew. This is a special broadcast on Budget Day to help you understand the changes to the tax laws that affect you, the individual taxpayer. And there were a whole host of announcements that were specifically aimed at you this time around. And by the way, if you've got questions related to anything that we speak about over the course of the next half an hour or so, I'd encourage you to send them to us on any of our social media platforms. My guest today, who are going to help you understand everything that has changed from this year onwards, is Sameer Kanabar, tax partner at EY in the studio, Puneet Shah, partner at Dhruva Advisors, who's joining in remotely, as well as Arvind Rao, the founder of Arvind Rao and Associates. Thank you so much, gentlemen, for taking the time. And the intention, of course, of this show, as I pointed out, is to help our viewers understand everything that has gone down. But before we start, let's talk about who this is affecting, because it is affecting two cohorts primarily. We're talking about individual taxpayers, and there are several changes that have been announced to the new tax regime to incentivize it further. And there's also changes that affect the investor. So that's the second cohort that we will be speaking about. Speaking about the first set, let's first listen into the specific portion of this budget speech today that related to individual taxpayers. Here's what Finance Minister Nirmala Sitharaman had to say.
I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes, and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
All right, so that was the Finance Minister listing out the major changes in the tax slabs. She also said today, in case you missed it, that 2/3 of individual investors have transitioned to the new tax regime. Sameer Kanabar, to you first. Let's talk about the major change. Is it going to drastically change what taxpayers do? Will the remaining third also start moving to the new tax regime?
Yeah, so of course the idea is to see how we can sunset or transition out the old tax regime, because we can't be living with both the tax regimes. And hence, since last couple of years, we are seeing those changes coming in. Idea is to see how people can move into the new tax regime, make them more attractive and phase out all deductions, as has happened even in corporates where all deductions or exemptions have been phased out.
So that's going to happen in your opinion?
If we look at the current incentives available to people below 10 lakhs or maybe even in the band of 8 to 10 lakhs, the HRA, the deduction for interest for housing, etc., the old regime is still beneficial, right? And more likely they are still likely to continue with the old regime, because at that band, every rupee saved is important for the class. So yes, people may not move, and of course, while 2/3 have already moved, we will have to just see how people want to make investments in other class of assets and not be forced to make investment in a given class, and thereby switch to the new regime.
That's a fair point. Puneet, coming to you next, what did you make of these changes? A lot has been said in the run-up to the budget, the desire of the middle class taxpayer to get a bit of a relief. Do you think that this is that relief?
I don't think so. I think the amendments are quite few and far between. Much more was expected. For example, the slabs which are tinkered in the new regime is very, very less. I mean, the saving of 17,500 rupees is actually very less as compared to what was desired or what was expected. The slabs are changed by 1 lakh rupee at every level without changing the rates of taxes. So I think the relief is quite marginal to my mind. Number one. Number two, if you look at the deductions, like a standard deduction, which is only deduction available under the new regime, is now increased from 50 to 75,000. It's a welcome change. It's a welcome increase. However, to my mind, not sufficient, considering that 50,000 was set up maybe a decade back, years back. So I think the expectation was at least standard deduction to increase to 1 lakh rupee. And similarly, as Samir mentioned, the taxpayers, the individual taxpayer, will still compare the deductions which are available under old regimes, such as HRA or interest on borrowings for the house property. And if those deductions are substantial, clearly they will continue to opt for the old regime.
You know, that's an operating point there. And in fact, it's perfect, because we were discussing, Arvind, earlier on in the day, and you drew up an Excel sheet where you were talking about various scenarios, and of course it differs from person to person depending on what they're investing in, what they're claiming, but there is a threshold beyond which the old tax regime still becomes more beneficial. Could you spell that out for us?
Yes. So before the slabs were increased today, if you look at assessment year 24-25 new regime tax rates, some brief calculations mention that as long as the total deduction that an assessee is claiming is in the range of say 3 to 3.5 lakh of rupees, or anything up to 3.5 lakh of rupees, the new regime favors better. But the moment the deductions, which could mean the HRA, the ATC, the ATD, NPS, everything, all these put together, if the moment they cross this 3.5 lakh per annum threshold, then for taxpayers, say even the middle class taxpayers, the old regime looks better.
Yeah, okay, that's a fair point. You know, by the way, and I hope that I will be able to pull this up at some point over the course of this conversation. The finance minister was asked this question specifically at a press conference about whether or not this is one of the steps that is being taken to finally get done with the old tax regime, whether there will be a sunset on this. And she said that this is being reviewed, that the changes to the new tax regime are in order to make the tax regime simpler. But she said that we still can't comment on whether or not this is the final death knell for the old tax regime. And the point that you're taking is well taken, Arvind, with regard to the benefits still available on the old tax regime. There were a couple of other changes as well, and specifically on NPS, and this affects quite a few people, so let's talk about it, Samir. Previously, deductions available by the employer's contribution to the National Pension Scheme. A lot of government employees benefit from this. It's been raised to 10% to 14%. There's a significant change there?
Yeah, and just one point on the previous slabs, that while the benefit projected 17,500 is actually 15 lakhs and above.
Yeah.
it is not getting translated at lower slabs.
We did a back of the envelope calculation. We said if you're earning up to 10 lakh rupees, the benefit is 10,000 rupees, right?
Absolutely. So if you look at 3 to 7 lakh slab, up to 3, of course, exempt, 3 to 7, the benefit is just 2,500.
Yes.
Which is basically 25,000 ka 10% kind of. So obviously, while what is being projected as benefit is not getting translated, it is only people in the higher bracket will get benefited under new regime, and that is why probably the recent statistics which has been put up, interestingly, on the website is to say that earlier 1/3 people were above 5 lakh bracket in terms of tax return filers. Now there are 50% people above 5 lakh bracket. So the 2/3 ratio probably that is coming in is because a lot of people are moving into higher tax brackets, and that's why opting. Whereas 1/3 are still in the lower tax bracket. Probably that's an interpretation. But coming back to NPS, so 10 to 14%, again, it is employer's contribution. So whatever employer contributes, extra 4% will now no longer get taxed and will be treated as exempt. And the way it works is that, this 14%, so if my salary is 100, if 14% is contributed, actually I say my salary is 86, it's not my 100, because that's how the way it gets calculated. So everything is then based on that. But obviously, any extra contribution above that, which is above 7.5 lakh rupees, up to 7.5 lakh, there is no impact. But above 7.5 lakh rupees, the interest gets taxed, not only the higher incremental amount, but interest gets taxed on an accrual basis.
Sure.
So that's the impact.
So that's a fair point. But it's still beneficial to the extent of that 4 percentage point increase in contribution, as long as you stay within that threshold. One more change that I will talk about with regard to the individual taxpayer before we talk about capital gains and the rationalization of capital gains tax. Arvind, we were talking about this earlier, and this has to do with the tax collected at source for transactions made in the liberalized remittance scheme. And you can actually set that off against the TDS, or tax deducted at source, if you communicate that to your employer. Can you explain that to us?
Yes. So Alex, while we were discussing this earlier in the day, and we did speak about TCS on LRS, but we also forgot that if you're buying a motor car, there is TCS on that as well. So basically, let me just spell it out. So whenever an individual is remitting money outside of India under the liberalized remittance scheme of RBI, which is up to $2.5 lakh dollars per year that can be remitted out. There is a 20% tax collected at source on this, as long as you are crossing that 7 lakh limit threshold that has been defined per individual. So the moment you're remitting this, there is a TCS collected and paid to the government, which now under the amendments in the proposal say that employer can take cognizance of this TCS if the employee declares it to the employer, offset it against the tax liability of the employee for the year, and accordingly deduct lower TDS on the monthly salaries. So the direct benefit out of this is for all those people who are either buying a motor car or sending money outside, if they have suffered TCS, they can disclose it to the employer, and thereby it could mean a little higher in-hand money for them from their salary.
It's a fair point, and it's definitely a benefit, because it's not a small amount of TCS that gets collected. It's quite a large amount, and that gives you more spending ability through the year if you communicate it to your employer, so you should do that. Let's also talk about the retail investor and how your lives change from today onwards. In fact, let's listen into what the Finance Minister had to say about the rationalization of the treatment of capital gains.
Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term.
Okay, so a complaint that tax experts and indeed several investors had for many years is that the treatment of various assets when it came to capital gains and taxation of capital gains was very different. Equity was 1 year for long-term capital gains, real estate was 2 years, gold as well as certain other assets were taxed as long-term capital gains if held beyond 3 years. Now that's been simplified. Puneet, I'm coming to you hopefully for a further clarification as to what constitutes financial assets, what constitutes unlisted assets and non-financial assets.
Yeah, sure. I think this is the single most important amendment made by the finance minister, and I think it was overdue. There has been long pending demand in terms of rationalization of the capital gains tax regime. And as you rightly said, there is a multiple rates, multiple holding period for different assets, financial assets, non-financial assets, indexation available, no indexation available. So several issues in the regime, and I think a good attempt has been made to rationalize or to simplify the capital gains tax regime. If I were to just summarize, listed is 12 months so far as the long-term capital gain is concerned. Anything below 12 months would be short-term capital gain for the listed securities. That includes debentures as well as shares. As so far as unlisted is concerned and all other assets are concerned, it would be 24 months. So now the 36 months period has gone away. So that's easy. It's 12 months or 24 months. So far as the rate of tax is concerned, again, there are only two rates, actually three rates. One is 12.5% for long-term capital gains on all assets, whether it is financial assets or non-financial assets. A very bold step taken, all assets treated at par, whether they are financial or non-financial assets. The rate of tax for long-term is 12.5%. Remember, the finance minister has removed indexation benefit. Again, a very important measure, and maybe rightly so, because the rate of tax for several long-term assets are reduced from 20% to 12.5%, unlisted stocks or property or whatever, right? So indexation benefit has been removed. So it's 12.5% without indexation benefit. So far as short-term assets are concerned, it is applicable, the rates will be applicable at the slab rates. Applicable slab rates, taxes will be paid except the listed equity, where the rate of tax is increased from 15% to 20%. So for listed equity, the rates have gone up from 10 to 12.5 and from 15 to 20, while for unlisted, it has come down from 20 to 12.5, so far as long-term is concerned. So it's a mixed bag in that sense. Maybe depending on your asset class, it will be either beneficial to you or it would be, or you will have a higher tax impact. So there is one specific class, sorry, just to complete, there is one specific class, which is, as we call section 50AA, which are specified mutual funds or market-linked debentures, where irrespective of the holding period, whether it is 12 months, 24 months, it would be considered to be short-term capital asset, and the rate of tax would be on a slab rate basis. So that's asset class which is like unlisted debentures, etc., are also now included in that.
Yeah.
And the higher rate of tax has been provided in that.
And that doesn't change. The change to the treatment of debt mutual funds was done a couple of budgets back, and that remains to be the case.
Sorry to add, they have just changed the definition.
Yeah.
Earlier it was like 35%. less than 35% to equity. Now they've aligned it with other equity-oriented mutual fund definition to make it 65%. So I think that rationalization was also, I think it was a step in a right direction.
Absolutely. Let's delve a little deeper into this indexation piece, because there might have been some misconceptions about whether or not this ultimately is beneficial or harmful. And we've done some calculations looking at the inflation. So first of all, if you don't understand this, the indexation benefit is what allows you to set off the impact of inflation against the capital gains that you're making on a particular asset. So just to put things very simply, if you bought a house in 2005 worth 1 crore rupees, and if the value of that house is now 2 crore rupees, you made a gain of 1 crore rupees. You have to look at the impact of inflation between 2005 and 2024, set that off against the capital gains that you're making, and then pay 20% on the remainder. That is being done away with. So you would probably be thinking that that's negative. But the reality is that it may not be. In fact, in most cases, it's either neutral or positive.
Positive, yeah. No, you're right. And if we look at least the immovable property, at least the back of the envelope calculation seems to suggest that if you're holding property since 2003 and later on, then the new amended rate of 12.5% as a long-term capital gain is more beneficial than the indexation that you are getting it. And obviously the indexation benefit started from 2001.
Yes, that's a base year.
Yeah, that's a base year. So it's hardly you lose out anything. So from that perspective, if you have recently bought property 2012, 2015, whatever, and if it is long-term and you're selling it, obviously this is going to be leaving more money in your pocket in terms of taxes in case you are selling it. And obviously, of course, you have a corresponding exemption if you're buying another house.
Yes, so that remains.
Yeah.
Okay, so very quickly, that last point that I wanted to talk about, there has been a difference between the treatment of dividends as well as buybacks. And this was clarified today. There was a change that was announced, and the buybacks that you participate in. So suppose you have equity shares of a company and you participate in the buyback that a company has announced, and you sell shares in the buyback, that is now taxable in your hands. But there is a clarification. We earlier thought that this would be capital gains tax, but it is not capital gains tax. Samir, can you explain that?
Yeah, so buyback again flip-flop. Earlier buyback for listed shares was capital gains, then buyback tax was only applicable for unlisted, then they brought in buyback tax for listed, where the company used to pay buyback tax on the differential value of the buyback minus the price at which the shares were issued, which was being paid as at the rate of 21% by the company. Now a flip-flop to say that effective 1st October, so this is effective 1st October, unlike the indexation and all of that which are effective today.
Yeah.
So with effect from 1st October, the buyback will be taxable first, not in the hands of company but in the hands of shareholders. Second, this will be treated as kind of dividend income, taxed as income from other sources. So it will get taxed as per the slab rates. And the cost that you have incurred to buy those shares. So for example, you bought the shares at IPO or at a face value 10 rupees, and say you have 10 shares, so your cost is 100. So 100 effectively becomes your loss,
Okay.
which is available to be offset against your capital gains.
Okay.
So in the same year, if you have any capital gain, you can offset the cost being resulting into loss against the capital gain, or you can carry forward.
And whatever you gain, net of that loss, is what you pay based on slab rate.
So one is, of course, the buyback value that you have realized is taxed as slab rate as per your slabs. The capital gain will get taxed as capital gain because that is the stock that you have sold on the market.
Okay.
So that is capital gains and you're offsetting. And then there is a gain, you pay 12.5% long term, 20% short term.
Okay, so all of this, some of this, I shouldn't say all of this, because I think my guests today have done an incredible job explaining sometimes what is quite complicated. I must thank all of you. Thank you so much for joining in and for answering all the questions that I had. And I'm sure if my viewers have more questions, you will be amenable to answering them later. Of course, we will take them up over the course of today as well as in the coming days as well. Thank you so much for tuning in. There's lots more coming up over the course of this evening, and this is NDTV Profit.